Subscribe to LearnCap and hit the bell icon to get notified.
Now, look at this, my dear soldiers. I asked you 1 rupee, you gave me 1 rupee. I asked you 2, you gave me 2. I asked you 5, you gave me 5. I asked you 10, you gave me 10. 20, 50, 100, 200, 500, 2000. Now, if I ask you 10,000, either you don't have that money or you don't want to give that money. Either you don't have that money or you don't want to give the money. And that is what, my dear soldiers, is the concept of what you can say the materiality, my dear soldiers. This is nothing but what you can say materiality. Now, what is materiality, my dear soldiers? An item is said to be material if its misstatement influences the economic decision of the user of the financial statement. I repeat, an item is said to be material if its misstatement influences the economic decision of the user of the financial statement. That's the thing here. So that is what we understand, my dear soldiers, by the materiality, and that's the thing here. So I repeat again one more time. An item is said to be material if its misstatement influences the economic decision of the user of the financial statement, and that is what we understand, my dear soldiers, by the concept, by the aspect of the materiality. That's the thing here. So this is what. So now when I asked you 1, everybody gave 1. But when I asked you 2 rupees or 5 rupees, everybody gave. But if I ask 2000, either you don't have the money or you don't want to give the money, because that amount stands to be what? Come on, my dear soldiers, material. It is heavily material in nature, and that is the thing actually here. See, just like happiness, materiality is also very, very subjective thing, my dear soldiers. It's a very subjective thing altogether. What makes you happy in one circumstances may not be able to make you happy in the other circumstances, and that's the thing here. So that is the thing. Same way, what is material for you may not be material for me. That's the thing here. And what is material for me may not be material for Mukesh Ambani or Adani. Like that, they'll be different parameter. That's the thing here. That is why we say, my dear soldiers, the concept of what you can say the materiality, and that's the thing here. Okay. So now, my dear soldiers, understand that any item is considered as material if it is influencing the economic decision and user of the financial statement. Now, welcome to the new standard on auditing. First, you write down the heading, Essay 320, Materiality in Planning and Performing of Audit. Please write down the heading, Essay 320, Materiality in Planning and Performing the Audit. Sir, should we remember the essay number and name? Yes, sir. Yes, sir. You have to remember the essay number and name. There is no other choice. So you have to remember the essay number and name, my dear soldiers. That's the thing here. So now, first of all, you have a standard Essay 320, Materiality in the Planning and Performing the Audit. That's the thing here. So this is what is standard on auditing, Essay 320. Now, next one, Materiality in Planning and Performing an Audit. Now, you just write down the heading as materiality. Write down an item is said to be material. Is said to be material if its misstatement influences the economic decision, if its misstatement influences the economic decision of user of financial statement, I repeat again one more time. An item is said to be material if its misstatement influences the economic decision of the user of the financial statement. This is a definition of materiality. See, for example, there is a 10 rupee difference, 20 rupee difference. We should not bother about the 10 rupee, 20 rupee. No. So for example, there is a difference of 20 rupees. It's a misstatement, but it is not a material misstatement. Here, we are more focusing on we are more focusing on the material misstatement, and that's the thing here. Now, auditor's determination of materiality is a matter of professional judgment, definitely. So, the auditor determination of materiality, it all depends upon the professional judgment. As I told you, for one person it may be material, for one person it may not be material. That's the thing here. Further, materiality is a subjective concept. Materiality stands to be subjective concept. So, materiality is a subjective concept. I was just telling you, just like happiness is different for different people. Similarly, my dear soldiers, materiality is also different for different people. It is very, very subjective in nature. That's the thing here. Okay, fine. That's the thing here. So now
Thank you,
let
sir.
me move forward, my dear soldiers. That's the thing here. So, as I highlighted, that materiality is a subjective concept. It is subjective in nature. Now, my dear soldiers, so for all of us, what is the aspect of materiality? Happiness, as I told you, some people are very happy eating chocolates. Some people are very happy, my dear soldiers, when they get wet in rain, actually. Here, same way, materiality also, as I told you, extremely subjective concept, changes from person to person. That's the thing here. Write down, please write down. Following aspects should be considered. Write down. Following aspect should be considered. Following aspect should be considered about the user of financial statement. Following aspect must be considered about the, what you can say, about the user of financial statement, and that's the thing here. So following aspect should be considered about the user of the what you can say, about the user of the financial statement. That's the thing here. So what are the aspects you should consider about the user of the financial statement? So I repeat again one more time. Following aspect must be considered about the, what you can say, about the user of the, what you can say, my dear soldiers, the financial statement. What are the aspects you should consider? Let us try to understand that. The first and the foremost thing is that user has proper understanding of business. User has proper understanding of financial statement. Third one, accounting estimates are based on professional judgment and assumptions. Accounting estimates are based on professional judgments and assumption. Now, when I say accounting estimates, my dear soldiers, they are nothing but, what you can say, provisions. That's the thing here. So, they are nothing but, what you can say, my dear soldiers, the provisions, and that's the thing here. So, now, my dear soldiers, that's the thing here. So, user has a proper understanding of financial statement. Accounting estimates are based on professional judgment and, what you can say, my dear soldiers, and the assumptions. It is also based on, what you can say, the assumptions, and that's the thing here. So this is what you need to highlight actually here. Okay, fine. So I hope you are clear, my dear soldiers. These are all you have to aspect you should consider about the user of the financial statement. Write down, user of financial statement understands the economic environment. User of financial statement, he understands the economic environment. He has a thorough and proper understanding of the economic environment. Fine. This is the next point, my dear. So the user of financial statement understand the economic environment. Now, use of benchmark in determining the materiality for the financial statement as a whole. So when we want to calculate materiality, we have to apply a percentage on a benchmark. So benchmark here is nothing but what you can say basis. Now you are telling that some items are material, some items are not material. How do you arrive at material item? How do you arrive at a material item is what the question we have to answer. That's the thing here. So you have to apply a percentage on a chosen benchmark. Sir, please give us a example for this. Example, say benchmark example will be what? Say turnover. Turnover. Now turnover is a good example. So what you will do, you will take 0.5%, 0.5% to 1% of turnover will be considered as material. So I repeat again one more time. 0.5% to 1% of turnover will be what you can say, it will be considered as what you can say as material. That's the thing here. So I repeat again one more time. The first and the foremost thing is what come on the turnover, and that's the thing here. So turnover. Now, so for example, a company's turnover is 1000 crore. If you apply 0.5% of 1000 crore, 0.5% of 1000 crore, it becomes 5 crore. Means what? See, turnover is a benchmark. You apply a percentage on the turnover to arrive as what is material. Now, generally, what is the percentage? 0.5% to 1%. It means what? On 1000 crore, if I multiply that by 0.5%, I get a benchmark, I get a amount of 5 crores. Now, this 5 crore is what you can say, it is considered as material. Is considered as material. Okay. 5 crore and above will be considered as material. Now, anything below 5 crore will not be considered as material. Imagine a transaction of 3 crore is not recorded. 3 crore is not recorded. Is it material or not material? Come on, tell me. In this case, for this case study, company having a turnover of 1000 crore, 3 crore is not recorded. It is not material. Is it material for you individually? Yes, it is material for you also. It is material for me also. But for that company, my dear soldiers, it will not be considered as what you can say as a material. That's the thing here. So that is what you have to understand, my dear soldiers, is that what is material and what is not material, you have to consider the same thing, my dear soldiers. That's the thing here. So this is what you need to understand. So you need to determine a percentage to be applied on a chosen benchmark, and that's the thing here. So determine a percentage to be applied on a what you can say a chosen benchmark. That's the thing here. So here 3 crore is not material, but suppose say because it is less than 5 crore, the cutoff limit, but suppose say 6 crore is not recorded. Now whether 6 crore not recorded, is it material? Answer is yes. It will be considered as material because it is above the materiality level. It falls in the purview and it is above the materiality level. So it will be considered as material. Okay. Fine, my dear soldiers. Have you all understood? Now, next thing, benchmark. How do you calculate the benchmark? As I told you, you calculate the benchmark on the turnover. You calculate the benchmark based on the profit. You calculate the benchmark based on the net asset or total expenses. That's the thing here. So you will apply a percentage. For example, turnover, you will take 0.5% to 2%. Okay. So this percentage are not fixed. It depends upon industry to industry. I generally take 0.5% to 1%. Like that, it depends upon industry to industry. These are all example. Profit, I take 5% to 10% of profit is considered as material. So when I want to calculate the materiality, I have to apply this percentage on the turnover, on the profit to arrive at what is material. For net asset, again it could be 1 to 2%, 1 to 2% of net asset will be considered as material. Total expense also 1 to 2%. or 0.5% to 2%. Total expenses also. Percentage will keep varying actually here. This is not fixed number. Depends upon entity to entity, case to case basis. So you will apply these percentages on the given benchmark and arrive as what is material and what is not material. That's the thing here. As I was telling you, for example, we take a benchmark of 0.5% of turnover. Now there was a company having 1000 crore turnover and 3 crore there is a misstatement. I was giving you this example. Now whether it is material or not material, come on, tell me. They all say it is not material. Very good. That is not at all material. So not a material misstatement. But suppose say there is a 1000 crore company and 6 crore misstatement, then it is a material misstatement. So this is what it is. So you have to first of all apply a percentage on the benchmark, and on based on that you will arrive at the materiality level. That's the thing here. Okay, fine. This is what you need to highlight, my dear soldiers, as far as the materiality is concerned. Again I repeat, my dear soldiers, an item is said to be material if its misstatement influences the economic decision of the user of the financial statement. So what is material in one circumstances may not be material in the other circumstances. They may have a varied view altogether. That's the thing here. Then next one, my dear soldiers, factors which affect the benchmark. Benchmark is nothing but what you can say basis. What is the factor that affects the, what you can say, the benchmark? Benchmark, again, as I told you, it's nothing but the basis. Let us try to learn this actually here. So now, as I was telling you about the aspect of materiality, let us try to understand that materiality, how do you calculate? You have to apply a percentage on a benchmark. Benchmark could be your turnover, benchmark could be the net asset, benchmark could be the total expenses, benchmark could be your net profit. So you have to apply certain percentage and then you have to arrive at what is material or what is not material. So a percentage has to be applied. That's the thing here. So let us look into the power of body dynamics, my dear soldiers. What are the factors to be considered to which affects the benchmark, my dear soldiers? All of you, action, come on. Elements of financial statement. First of all, you have to consider the elements of financial statement. So you have to consider the elements of financial statement. What are the elements of financial statement? Now, elements of financial state, see, how do you calculate the benchmark? How do you decide on benchmark? First thing, you will consider the elements of financial statement. Now, the asset, the liability, the income, and the expenses, you have to consider the elements of financial statement. Second one, my dear soldiers, come on, item on which action, all of your action, item on which the user tends to be focused, item on which the user tends to be focused, item on which the user tends to be focused. First of all, my dear soldiers, elements of financial statement, the asset, the liability, the income, and the expenses. An item on which the user tends to be focused, item on which user tend to be focused. If you're an investor in the balance sheet and P&L, can you tell me what are the two items you will focus on? You will be focusing on the various items, that the equity of the company, the turnover of the company, various items will be focused on, and that's the thing here. So yes, then what else, my dear soldiers? So now you'll be focusing on these various things actually here. That's the thing here. So you'll be focusing on the equity of the company, the debt of the company, and that's the thing here. So okay. So now, first of all, come on, all of you, action again. Elements of financial statement, the asset, the liability, the income, and the expenses. Second one, item on which the user tends to be focused. What is the item on which the user tends to be focused? That's the thing here. Third one, my dear soldiers, the nature of entity. Third one, the nature of entity, and life cycle of the product, life cycle of the product, life cycle of the product, life cycle of the product. Then next one, industry and economic environment, industry and economic environment, that's the thing here. Industry and economic environment, that's the thing here. So industry and economic environment, that's the thing here. First of all, my dear soldiers, the elements of financial statement, the asset, the liability, the income, and the expenses. Then, my dear soldiers, item on which the user tends to be focused, nature of entity, and then life cycle of the product, industry and economic environment. Five. Industry and economic environment. Industry and economic environment. So write down the heading, factors which affects the benchmark. Write down first point, elements of financial statement. Elements of financial statement. Elements of financial statement. The first thing what you will consider, my dear soldiers, is the elements of financial statement. Write down asset, liability, income, expenses, asset, liability, income, expenses, asset, liability, income, expenses, income, expenses, asset, liability, income, expenses. That's the thing here. So, what are the assets? What are the liability? What are the income? What are the what you can say the expenses? That's the thing here. So, I repeat again one more time: the asset, the liability, the income, the expenses. That's the thing here. Then next one, second one, item on which the user tends to be focused. Item on which the user tends to be focused. Item on which the user tends to be focused. Item on which the user tends to be focused. So what are the item on which what you can say the user tends to be focused? That's the thing. So second one, the item on which the user tends to be focused, and that's the thing here. So second one is what come on, the item on which the user tends to be focused. Then nature of entity, write down nature of entity. What is the nature of entity? You should be very clear on the nature of entity. Write down the picture. Then fourth one, life cycle of the product. Life cycle of the product. Life cycle of the product. Write down the picture of a bicycle. Life cycle of a product. Life cycle of a product. And fifth one, industry and economic environment. Drawing a picture of two hands. Industry and economic environment. Industry and economic environment. So what is the industry and economic environment? Even that also you should be highlighting it here. So these are the 5 things, my dear soldiers. The industry and the economic environment. That's the thing here. Next one, sixth one. Sixth one is how the entity is structured, how the entity is financed. So how the entity is structured and how the entity is financed, that's the thing here. Now this you don't have to write down what is being displayed. You write down what I'm dictating, how the entity is structured and how the entity is financed. How the entity is structured and how the entity is financed. And last one, seventh one, you write down volatility of the benchmark, volatility of the benchmark, volatility of the benchmark, volatility of the benchmark. Sixth one, how the entity is structured and how it is financed. So you write down dollar, how it is structured, how it is financed. And then seventh one, volatility of the benchmark, volatility of the benchmark. So volatility of the benchmark. Materiality of the benchmark. These are the factors which affects the benchmark. Benchmark is nothing but what you can say, my dear soldiers, the basis. It is nothing but the basis. Now, benchmark approach may include, so this already I've given you example. You have to apply percentage on profit after tax, which can be 5% to 10% of profit as a material. When I say 5% of profit, 5% of profit will be considered as material. It could be total revenue. For example, 0.5% to 2% of revenue is considered as turnover. GP, 5% to 10% of GP. Our total expenses, 1% to 2%. Our net asset value, 1% to 2%. This percentage are nothing but it shows that an item is material. My item will be considered as material. Let me move forward actually. Determining materiality and performance materiality when planning the audit. That's the thing here. Now, what happens, my dear soldiers? I have to write down the heading as determining materiality and performance materiality when planning the audit. So, sir, what is performance materiality? What do you understand by the performance materiality? We understood that an item which influences the economic decision of the user of the financial statement. That's the thing here. So now what is exactly is a performance materiality? Let us try to understand here. I told you turnover of 1000 crore, and if I want to calculate the materiality, which is 0.5% of 1000 crore, it becomes 5 crore. Whether 5 crore is material, so 5 crore is material. Now, suppose say 3 crores are not recorded in this case, is it material? It's not material. But suppose say 10 transaction of 3 crores are not recorded, is it material? 10 transactions of 3 crores are not recorded, is it material? Okay. Yes. 3 crore individually it is not material. I also agree, you also agree. I taught you that concept. So, what is performance materiality? It's an item which is fixed by auditor. It is less than the actual materiality. You see, this is 5 crore is the actual materiality. It's a materiality. And generally, performance materiality, how do I take? I apply 50% on the actual materiality. Now, individually, the item is not material. 3 crore is not material. It is below 5 crore. But if you aggregate with multiple misstatements, it becomes material. That is what we understand by the performance materiality. Always remember, performance materiality is always 50% of the actual materiality. What come on? It is what come on, my dear soldiers. It is nothing but what you can say 50% of the actual materiality. What come on? The 50% of the actual materiality will be considered as performance materiality. I repeat again one more time, my dear soldiers. An item is considered as material, my dear soldiers, if its misstatement influences the economic decision of the user of the financial statement. That's the thing here. I repeat again one more time. An item is said to be material if its misstatement influences the economic decision of the user of the financial statement, and that is what we understand by what you can say the material. That's the thing here. Performance materiality is nothing but individually the item is not material, but if you aggregate, it becomes material. And always performance materiality is less than the whatever actual materiality you have fixed. All of you have understood the meaning of performance materiality. So now, first of all, the overall audit strategy will be what? The auditor shall determine materiality for financial statement as a whole and ABCD. So for financial statement as a whole and for ABCD, what is ABCD? ABCD is account balance, which is nothing but the balance sheet item. Then C is class of transaction, which is nothing but the P&L items. And D is nothing but disclosure and presentation, which is nothing but the notes to accounts. That's the thing here, which is nothing but the notes to accounts, and that's the thing here. So you have what you can say, you have the account balance, which is nothing but the balance sheet item. C is the class of transaction, which is nothing but the P&L item. And D is what you can say the disclosure and presentation, which is nothing but what you can say my dear soldiers, the notes to accounts, and that's the thing here. So I repeat again one more time: account balance, that is balance sheet item; C, class of transaction, P&L item; and D is nothing but the disclosure and presentation, which is nothing but what you can say, my dear soldiers, the notes to accounts. That's the thing here. So account balance, the class of transaction, and lastly what we can say, my dear soldiers, the disclosure and presentation. That's the thing here. So I repeat again one more time: the account balance, the class of transaction, and what you can say, the disclosure and presentation. That's the thing here. Okay. So you see, it's nothing but balance sheet item, P&L item, notes to accounts. So what does it mean? You'll find out the materiality for the entire financial statement, and for each individual item also you can find out. For balance sheet item, for P&L item also you can find out the material. That's what is material, what is not material. Now, I went for audit of a company, my dear soldiers. And when I went for the audit of a company, there what happened, my dear soldiers, the same case, the turnover of the company is 1000 crore. And I highlighted that there is a difference of what you can say 15,000 rupees difference. The turnover of the companies was during my articleship days, and the turnover of the client is 1000 crore, and if I have to multiply 0.5%, I get 5 crore as material. But this was my articleship days actually here, and I was an article assistant. So I said that there is a difference of 15,000 rupees. The client started laughing actually. Client started making fun of me. What is this? 15,000 I will only give you. I said it is 100 times my stipend. I said it is 100 because my stipend that time during 90s, my stipend was 150 rupees per month. So I said 100 times my stipend you are not recorded. 100 times. So he said you're getting only 150 rupees per month. My toilet cleaner, he gets more than that. He gets more than 1000 rupees a month. Why don't you become a toilet cleaner? He made fun of me. He tore me like anything, my dear soldiers. That's the thing here. He said, I'm paying. Why don't you change your articleship? You stop your articleship and work as a toilet cleaner in my office. I will give you more money. So the client, no doubt, he insulted me left and right. What you will do, my dear soldier? That's the thing here. So when money is not there, there's one thing you get insult. That's the thing here. But I was novice. I was newcomer to the audit field. For me, 15,000 was also a big thing. I was not aware. See, just like how some of the students were thinking that 3 crore wide is not material for 1000 crore. See, that you took time for you to understand. You have to think from the point of view of the client. From the point of view of the client, you have to think. And you should not think from your point of view. Then he called up my boss. He told my boss that that your article is arguing for 15,000 rupees is arguing. And my boss called me to the office actually here, and he gave a gyan to me that why are you arguing with the client? And he told me an example of what you can say, my dear soldiers, the Reliance Industries. He gave an example of Reliance Industries. Now that example I cannot take it because it was example of 90s. He said, what is the turnover of Reliance Industries? It is approximately 6 lakh crores. And 0.5% of 6 lakh crore is 3,000 crore. Now, Reliance Industries does not record 1,000 crore. It is not material. But 1,000 crore is material for you. Is it material for you or not? Come on, tell me. Not only for this Janma, next 100 Janma it is material. Oh my God. So you add my name also. I was shocked. I called up my friends, some 20-25 friends I called up. That time 90s we had the dialer phone, and calling, my hand became 23 friends I called. 1,000 crore is not material. 1,000 crore is not material. Wow, 1,000 crore is not material. That's the thing here. So 1,000 crore is not material, and that's the thing here. So now My dear soldiers, understand that 1000 crore is not material, and that's a thing here. Okay. So fine, my dear soldiers, understand that what is material in one circumstances may not be material, my dear soldiers, in the other circumstances, and that's the thing here. So now there what happens, my dear soldiers, 1000 crore also is not material. That's for Reliance Industries. Shocking thing actually here. So anyway, it was a hard way I learned the concept of material. Now I don't get a shock of my life actually, but I keep thinking, but articles, they keep getting a shock actually here. It's normal. 1 crore, 2 crore for a larger company, they may not bother about that. Okay, that's the thing here. Soldiers, my dear soldiers, this Mukesh Ambani, Reliance Industries example I was giving you. So soldiers, please understand that an item is said to be material if its misstatement influences the economic decision of the user of the financial statement. Okay, fine. So now, my dear soldiers, as we were discussing about the materiality, let us write down the definition of performance materiality. I already told you that performance materiality is fixed by auditor. It is less than the actual materiality to cover small value items which are individually not material, but in aggregate they are considered as material. That's the thing here. So you can write down performance materiality means the amount set by auditor at less than the materiality for the financial statement. So it is a amount set by auditor at less than the materiality for the financial statement, plus symbol you write down, to cover small value items, to cover small value items, to cover, what you can say, my dear soldiers, the small value items, to cover the small value items which are individually not material, but in aggregate, they are material. So to cover small value items which are individually they are not material, but in aggregate, my dear soldiers, they are material. That's the thing here. So that is what we understand by the concept of the performance materiality. That's the thing here. So I repeat again one more time. Performance materiality means the amount set by the auditor at less than the materiality for the financial statement to cover small value items which are individually not material, but in aggregate they are material. As I was giving you example that for a 5 crore materiality level, 3 crore is not at all material. But if 10 transactions of 3 crores are not recorded, then individually 3 crore is not material, but in aggregate, if suppose say 10 transactions you add up, then it becomes material. So that is what we need to highlight about performance materiality. Already we have discussed this. Generally, this is always like, say, you can write down 50% of materiality. Generally is considered as performance materiality. Okay, fine. Now let us move forward. Now suppose say cashier stole 1000 rupees on a particular day. Now when a cashier stole 1000 rupees on a particular day, is it material? 1000 rupees on a particular day it is stolen. Is it material? The answer here, my dear soldiers, is no. It is definitely, my dear soldiers, it's not at all material. So 1000 rupees stolen on a particular day, is it material? The answer, my dear soldiers, is no. That it's not at all material, and that's the thing here. So 1000 rupees stolen on a particular day. Whereas if the situation is like this, that suppose say 1,000 rupees is stolen every day by the cashier. Every day 1,000 rupees is stolen. Now, is it material? Come on. It will be material. Individually, 1,000 rupees may not be material, but 1,000 rupees stolen every day, every day, every day, every day, what will happen? Automatically, the item will become what you can say the material, and that's the thing. Automatically, it will fall in the category of what you can say the materiality. So, it will be considered as what you can say as material. That's the thing here. So, this is what you have to understand about what you can say about the what you can say, my dear soldiers, the performance materiality. Individually, it is not material, but in aggregate, it will be considered as material. Now, audit risk and materiality, basically, there is a what you can say, my dear soldiers, a inverse relationship between the materiality and the degree of audit risk. Always there stands to be a inverse relationship. In the sense, my dear soldiers, if the risk is higher, then what will happen, my dear soldiers? The materiality level should be lower. Materiality level should be lower. So audit risk and materiality, they share a inverse relationship. That's the thing here. So risk is inversely proportional to 1. It's like 1 by materiality level. It is inversely proportional to 1 by materiality level. So you need to lower the materiality level. See, suppose say, always remember, if the risk is higher, suppose say the risk stands to be on a higher side, I have to check more transaction. If I have to check more transaction means I have to lower the materiality level. Instead of 5 crore, I should bring it down to 2.5 crore. So what will happen? I will start checking the transaction which is 2.5 crore and above. Okay, that is the logic it is applied. See, when risk is higher, I want to check more transaction. If I want to check more transaction, I should always reduce the materiality level. So again, let me repeat, if there is more risk, it is more and more risk is involved, always remember that I want to check more transaction. More transaction means automatically I need to lower the materiality level so that I can cover more transaction. That's the whole logic behind it. Now, if you see, my dear soldiers, say risk is higher. So in such case, what will happen? I have to keep the materiality level as lower. So what will happen, my dear soldiers, so that I can cover more transaction. That's the whole logic actually here. So if I keep materiality level more, the number of transaction which I will check will become automatically, it will become less. That is why it stands to be having a inverse relationship. Okay. Everybody has understood, my dear soldiers. Okay. So this is the inverse relationship. Similarly, if the risk is less, then I can always increase the materiality level. When I see, for example, from 5 crore, I increase the materiality level to 10 crores. What does it mean? It means that I will check the transaction above 10 crores. Below 10 crores, I will not be bothered. So the number of transaction which I want to check will automatically, it will be reduced. So it will be the number of transactions which I have to check will be reduced. Drastically, it will get reduced. That's the whole logic behind it. Okay. Aarti, I hope you got the concept, and others also have understood the concept with these two graphs. Okay. That is why there is a inverse relationship. Okay, now next one, let us move forward. Now, revision of materiality level as the audit progresses. Materiality will be for financial statement and ABCD. So we fix the materiality for the financial statement as a whole, and at ABCD, at balance sheet item, P&L item, we fix the materiality. Now there may be a change in the circumstances. Write down revision in materiality level as the audit progresses. Materiality for the financial statement at ABCD, it will be revised. It will be revised because as a result of change in what you can say circumstances, change in circumstances. Imagine they have done fraud at a smaller amount, huge amount of fraud they have done. As I told you, individually it is not material, but in aggregate, what will happen? It becomes material in nature. That's the thing. So for that's the one thing here. So materiality, what you can say, as a result of change in the circumstances, and also what you can say, my dear soldiers, any new information has come into picture. So why they are revising? Because of either change in the circumstances, or some new information coming into picture, or change in the auditor's understanding of entity and operation. Three reasons why there is a revision in materiality: either change in circumstances, new information coming up, or change in the auditor's understanding of the entity. Any change in the auditor's understanding of entity or operation, you may think of revising the materiality. You will say, okay, we have to revise the materiality. Now, so these three are the most important thing. Revision of materiality. So what will happen? The auditor shall determine whether it is necessary to revise materiality and performance materiality. Should I revise the materiality? And automatically when I revise the materiality, automatically even the performance materiality also gets revised. And what is the impact on the nature, timing and extent of further audit procedure? So if I revise the materiality, what will happen? The impact on my audit procedures, that you have to be very clear. What is the impact actually? So I repeat again one more time, my dear soldiers. The auditor shall determine whether it is necessary to revise the materiality and the performance materiality, and what is the impact of such revision on nature, extent, timing of the further audit procedure, that you have to highlight about the revision. See, for example, earlier I thought I will take 0.5% of turnover. Now I said, no, no, no. A lot of issues are there in the company. A lot of problems are there in the company. A lot of challenges. A lot of challenges means I have to check more transaction. I have to check more transaction means automatically what I should do? I should reduce the percentage of benchmark. So I should reduce the materiality level. So now I will take 0.25% of the turnover. Straight away I will revise the materiality. Not only I can revise it at the financial statement level, but also I can revise at the ABCD level. At ABCD level also, the revision can be done. That's the thing here. Okay, fine. So next one, my dear soldiers, documenting the materiality. So now let us try to understand the documentation of materiality. Is documenting the materiality. You have to document the materiality. You have to document the performance materiality. You have to document. Document means auditor should write down in his working paper and keep it. Auditor, basically what happens, my dear soldiers, he will document the materiality. He will also document the, what you can say, the performance materiality. That's the thing here. So now materiality at financial statement level and ABCD level, at the balance sheet item, P&L item, what is material, and also at the financial statement level. Then any changes in the materiality, you have to highlight it. And also, I go again back, changes in the materiality. Also, you can add up the performance materiality. Performance materiality. I repeat again one more time. The materiality at the, what you can say, at the financial statement level, materiality at the, what you can say, ABCD level, changes, and lastly, what you can say, my dear soldiers, the performance materiality. Even performance materiality also should be considered. That's the thing here. Okay, you should document all those things in the audit working paper of the client. It should document it and keep it actually. Okay, fine. Documentation in the sense, tomorrow you have to they will be asked a question by the government that have you done the audit as per the standards on auditing? Have you done the audit as per the standards on auditing? They will ask a question. So whether audit was done as per the standards on auditing, yes or no, they will raise a question in this area, and accordingly you need to give a answer according to that. That's the thing here. Okay, so I hope all of you are clear with this, my dear soldiers. Now next one examination question. With reference to essay 320, indicate the factors which may affect the identification of an appropriate benchmark in determining the materiality for the financial statement as a whole. With reference to SA 320, you have to indicate the factors which may affect the identification of an appropriate benchmark in determining the materiality for the financial statement level. What are the factors which may come in? Now, this answer, you have to put the 7 actions, my dear soldiers. Come on, just give me the action through what you can say, body dynamics. Come on. One is, yes, elements of financial statement. And then second one, item on which you tend to focus. What are the item on which you tend to focus? Then next one, what is the third one? Come on. Nature of entity. Nature of entity, very good. Next one, fourth one. What is the fourth one, soldiers? Life cycle of the product. Life cycle of the product, very good. Life cycle of the product. And then what is the next one, soldiers? Come on. What is the next one? Volatility of the benchmark. Volatility of the bench. No, not volatility. Yes, the economic, industry and economic environment. Industry and economic environment. And sixth one, how the entity is structured, how the entity is financed, how it is structured, how it is financed. Last one, what is the last one, my dear soldiers? The volatility of the benchmark. You have to consider the volatility of the benchmark. Very good, very good. This is what the answer is expected here. Okay. So, factors which affect the identification of the benchmark as per SA 320.
Subscribe to LearnCap and hit the bell icon to get notified.